Everyone, and welcome to Secrets to Success, our second installment in a series on the Connecticut Small Business Boost Fund and how it can be a tool for your Main Street businesses. My name is Michelle McCabe, the Executive Director for Connecticut Main Street Center. And before we begin, I just have a few introductory remarks. Connecticut Main Street is the expert resource for developing and sustaining the vibrant downtowns and main streets that fuel our state's prosperity. Our mission is to assess, educate, convene, and advocate in order to develop and grow downtowns. We are grateful to our sponsors and funding partners. Connecticut Main Street's founding sponsors are Eversource and the Connecticut Department of Economic and Community Development, and our growth sponsors are Avangrid and the Connecticut State Historic Preservation Office. At Connecticut Main Street, we believe that vibrant, sustainable main streets are developed around these 6 components: a unique sense of place, economic vitality, community engagement, and policies that support appropriate growth, equitable places and inclusive practices, sustainability and protection of natural resources, and connectivity with a focus on multimodal transit. We recognize that the small businesses on Main Street contribute to each of these components in many ways, and that our members appreciate how the success of their small businesses equates to a successful Main Street. Today's topic is a deeper dive into the Connecticut Small Business Boost Fund with information on what makes for a successful application and some possible uses. I want to encourage you to please fill out the brief survey at the end of the webinar to inform our subsequent explorations. Our agenda for this morning is as follows. Our speaker, Marlon Samuels from Pursuit Lending, will provide an overview of the fund and how businesses can increase their chances for success. Carl Rosa, Connecticut Main Street Center's Field Services Director, will provide a Main Street perspective, and then we will field questions. During the presentation, please feel free to pose your questions in the chat, and we will make a note of them for the Q&A. With that, I am very pleased to introduce you to our speaker, Marlon Samuels from Pursuit Lending. Marlon has spent more than 15 years building relationships with the small business community in New York, New Jersey, Pennsylvania, and Connecticut. He has helped businesses across industries and stages to access fair and affordable loans, as well as educational resources to keep them growing. As Vice President of Business Development at Pursuit, Marlon focuses on building connections with various community groups, as well as bank partners to expand Pursuit's reach throughout the business community. He also delivers community development to low and middle income markets and leverages his skills and experience in professional networking through local chambers of commerce, city agencies, and small business development centers. Through this work, he helps business owners gain access to resources so that they can reach higher, transform, and grow. Marlon believes that small businesses are the backbone of the American economy, and this belief fuels his drive and focus to work closely with the individual business owner, knowing that their success will ultimately extend to the broader community in the form of new employment opportunities, economic development, and positive change. Thank you so much for joining us, Marlon.
Thanks for having me. I appreciate it. And thank you to all the folks who are on my screen. I can't really see everyone, but it's great to be here to share with you all regarding the Small Business Boost Fund and just a little bit, about Pursuit and myself. As a matter of fact, well, we just learned about me, so I'll just kind of jump in and talk a little bit about Pursuit. Pursuit, we are a community-focused lender, been in existence for over 65 years. Most of you, we may be new to you because we're relatively new to the Connecticut market. Pursuit has been around for some time, operating in the states of New York, New Jersey, and Connecticut. And so we have a special focus around providing solutions to help businesses grow and pretty much achieve their goals. And we do this essentially through a 15 programs that we typically have in multiple markets, like I mentioned before, all whether our portfolio products or through the SBA, we have access to various different products. And again, the goal of Pursuit is really to provide folks with access to resources and funding so they can grow and get to the next level. Today, we're gonna try to go through the Small Business Boost Fund and kind of speak to what the program is, some details around it, some background, as well as talk about the how businesses can benefit from the program. We'll talk about specifically to Pursuit's process and how we go about the entire process from pre-application all the way through funding. We'll talk about some success stories, and from there, we can definitely go through and answer any questions that you may have. And so I want to kind of jump forward and talk about why Pursuit is such a great partner to have, especially with this Boost program. And it really comes with the years of experience that we've had, like I mentioned before, over 65 years of small business experience. The level of support that our clients receive, and Michelle, you can move on to slide number 4. The level of support that our clients receive is huge, right? We provide one-on-one support with an actual lender from start to finish. It's important that I stress that because I know some of the experience and feedback we've gotten. I know in some instances, depending on the lender you're working with, it may be an automated system that you're working through in terms of automated emails and kind of like a general pool that you're kind of placed into. We have the capacity. Our team is as big as 150 employees, and so every person that comes into our portal gets one-on-one dedicated coverage with a lender throughout the entire process. And we're responsible lenders, right? We definitely provide speed in terms of how fast we turn over our loans, but at the same time, we thoroughly underwrite our loan applications to ensure that we're being responsible, and larger because obviously we're talking about state funds, right? So we want to make sure that we're doing our very best to manage those funds properly. So just to kind of give you some background, on the program. So the Connecticut Small Business Boost Fund, this is more of a general economic growth loan program. The mission of the program really is to provide access to affordable, flexible capital to traditionally what we call the underserved community, right? And that's often minority, women-owned businesses. And in this particular instance, and one of the very few times we've seen where a state-run program actually open its funding to nonprofit organizations, and there's some, there's more regarding the nonprofit organization, and for the most part, it is nonprofit organizations that usually they're involved in things that may alleviate, what we call poverty. They are creating jobs or job retention, combating community deterioration, promoting to some level of economic revitalization. When you think about distressed communities, right? So when you think about nonprofits, kind of keep that in the back of your mind. Not every lender participate in providing funding to nonprofit organization, and I will be clear to say that Pursuit is one of them. Typically, we focus on nonprofit organization that has sort of like a for-profit model, right, where they are generating revenues outside of just the donations or membership dues or whatever the case may be. Think about it more as something where there's a product or service involved that's generating some type of revenue. So I just want to kind of put that out there in terms of some program background. And Michelle, you may not have these slides, but I just want to kind of give some background if that's okay. All right. The program is that the administrators for the program is NDC, which is National Development Council, as well as Community Reinvestment Fund, known as CRF. There are several lenders that are participated in this program, and I'll just give you a list of a few of them that are participated. NDC themselves, there is Ascendus Capital for Change, I think CEDF, I think is one of them, Sector, and Pursuit is obviously one, and I think HEDCO. There are only two, if I'm not mistaken, that goes to the maximum of the loan program, which is up to $500,000, and that is NDC and Pursuit. The platform that folks usually go through, I'm sure you're familiar with it, is the Connect to Capital platform, which there's a pre-application phase that clients usually go through first. And when they get through that pre-application phase, they have the ability to answer a few questions. And based on the answers to those questions, they get to choose a lender that come up based on the filters and the answers that they provided. Okay, so just again, some background on the program. And Michelle, you can move on to the next slide to kind of go into now some specifics regarding the program itself. The program is a loan fund that allows funding anywhere from 5,000 up to 500,000. Depending on the size of the business, depending on their revenues, depending on years in business, it determines the max to which they go. For instance, a business with under 1 year, even if based on that 1 year cash flow, they can actually support a loan up to $500,000. Businesses under 1 year are usually capped at the 100,000 mark. So it's just kind of important to make those distinction. But the program is such that based on the terms that we're looking at here, and these are amazing rates and terms. We're talking about interest rate fixed at 4.5%, loan amounts up to 100,000, 5 years, and anything over 100,000 has a term of up to 6 years. And for Pursuit, our time to funding can be anywhere from 2 to 4 weeks. I'll dig into that just a little bit more when we get towards the end to kind of talk about our process and just how we streamline deals and some of the challenges that we experience throughout the closing process. But in many cases, this program, just serves as such a great option for businesses, because when you compare to the more attractive loans, the loans that small businesses that don't need traditional banking financing usually turn to, like the SBA 7A loan product, right? This product is by far more attractive because we're talking about, again, loan amounts up to $500,000 at a rate of 4.5%. Today it's very hard for you to find a loan, a working capital loan for, within this, outside of prime, right? Because typically right now, most lenders that do SBA 7A, they're doing prime plus points. And just a few days ago, we learned that prime just went up to 7.5%. And I cannot believe this. It's insane just where interest rates are today. But think about the margins that go on top of prime, right? The margins are typically anywhere from 2.5% or 2%, I would say, up to as much as 4%. So 7.5, you do the math on that. It's pretty high rate right now and very high cost for capital these days. So the state of Connecticut has a unique opportunity to provide capital still to some of our businesses that were largely impacted by COVID, still trying to, really, gain some footing and recover. This is a unique opportunity for business to really, get their foot back, scale and grow. So we're excited to be a part of this program. Now, in terms of the program use of funds. Listen, these proceeds can be used for various types of working capital needs, right? So we're talking, and this includes payroll, utilities, rent, supplies, equipment, leasehold improvements, and there are certain eligibility around refinancing, providing that we're saving the borrower. And I don't remember exactly what those percentages are, but there has to be a percentage in terms of savings. But in most cases today, there will be huge savings because currently the leading source of loans right now for the underserved is actually the online lenders who are doing anywhere, as interest rates up to as much as 60%, which is insane. When you think about the growth margins for our small businesses and the profit margins for our businesses and what these interest rates are, it only creates a cycle for businesses where they're just borrowing to cover, some kind of gap, right? When really what we want to do is to get businesses taking on loans that will help them to grow. And this is it. This is the product that's going to help them do that. So when it comes to debt refinance, I can definitely, answer more questions on that. I won't get into too much details about it, but there are opportunities for us to refinance debt here as long as it's created some kind of savings to the borrower. Now, from a underwriting standpoint, this loan is typically, and I'll just throw this in there, is really well, let's just talk about the program requirements in terms of what we look for. Businesses has to be in existence for at least 1 or more years in business. They have to obviously operate in the state of Connecticut. Gross revenue is less than $8 million per year, and 100 or fewer in terms of full-time employees. There were some questions that were in the beginning where folks are asking, what if I'm a sole proprietor, a one-man shop? This program allows room for even a one-man operation, one man, one woman operation kind of thing. So it doesn't matter as long as you are under 100 employees, totally fine. Now, in terms of from an underwriting criteria standpoint, right, this program is more focused on cash flow analysis, right? So when we talk about cash flow analysis, the debt service coverage ratio for this program is 1.15%. Now, in terms of what that really means, let me just kind of give some examples. Typically, what we look for is we base that, and you can move on to the next slide. We typically base that off of the previous tax year, right? So you're looking at 2021, sort of like the tell-all year that we look at for our cash flow analysis. Now, the program is flexible, where there are instances where there are businesses that did not necessarily recover in 2021 and were still impacted by whether it was, a shutdown period or just by nature of the fact that their industry were so impacted that they didn't see a recovery until maybe fourth quarter of 2021. So their revenues may not reflect that. We are looking at interim financials in 2022 to kind of make decisions off the interim financials. Now, when we're making decisions off interim financials, meaning 2022, in most cases, we're going to cap that business at 100,000 because we're operating on, financials that are not considered verified financials, if that makes sense, right? It is pretty much, stated information because we're working off a balance sheet and a profit and loss statement. So for the most part, 2021 is a tell-all year that we look at for that cash flow analysis. And as far as minimum credit is concerned, I don't want to focus too much on the criteria from a credit score standpoint, but more importantly, what is driving that score, right? I'll give you an example. I just recently, and this is not by any chance a rule, but I just did a loan for a client that had a FICO score of 558, right? It was really the story behind the score that kind of, gave us that, hey, this is a client worth taking risk on, right? When you look at historically, her credit outside of 2020, 2021 was perfect, right? And coming into 2022, perfect, right? But this business, when we kind of, did a deep dive to understand what's the story behind the credit score, right? We noticed that, it was obviously during a time of COVID, but more importantly, her explanation was that, listen, I did not lay off or let go one employee during COVID. And her thing was, I'd rather be late on my own bills than not pay my employees. And so I put my employees first, and again, just based on the historical data, there were no cases of, active bankruptcies. There were no outstanding liens or judgments, nothing of that nature. She just had some latencies, right, which drove her score down. But in addition to that, there was a dependency on the credit cards because the revenues weren't coming in the business. So she had to rely on her personal credit card. That utilization ratio, if you know anything about utilization ratio, it can really, do some real damage to your score, right? So in her case, take the utilization out of it and those few missed payments, she would have been right back where she was, which was high 700s in terms of her score, right? So we were able to apply some common sense underwriting there to create a yes in that particular instance, when automatically probably should have been in decline, right? If we're just basing it off program rules. So the program does allow some flexibility to the lender. And for Pursuit, we're more concerned about the history. Is there a pattern here, right? So again, when you think of score, let's not get too locked in on that. And if I can just throw in a little bit of another example of ways that we were able to work around a credit score situation, Pursuit does, I'm not sure about the other lenders, but Pursuit does allow for a borrower to add a guarantor in order to offset that FICO score. So the way we look at it is it's the average of two or more score, right? So if one owner, let's say, has a 550 score, and there may have been some concerns around the credit itself that we may think, we may need another guarantor just to kind of be sure, right? There was some historical data pre-COVID that showed that there were some latencies before. May not necessarily be a pattern, but because we saw that prior to COVID, we just want to be sure. So we were able to get that borrower to add a guarantor. And here's the cool part about it, right? The guarantor does not have to be someone with ownership interest in the business. They don't even have to be a member of your household. It has to be someone who has income and a good credit score and willing to sign and take on the risk that I'm going to be a guarantor if something goes wrong with this loan. So that was another situation that we were able to create a yes in that situation. But we typically, look for clients with no tax liens, judgments, or anything of that nature, and just be current on all of your federal and local taxes. And we'll kind of get into more details in terms of the taxes and how that's created an impact for some of our borrowers. But you can move on to the next slide. So I would say, the best way to kind of keep things moving along for us is once you go through, and if you're taking clients through the portal, once they are matched, I would say it's important that they start gathering these documents even before they get through that pre-application, right? Most 2 years of tax returns for both personal and business, right? Obviously, if the business only has 1 year in operation, we'll only ask for 1 year business, but we still need to have 2 years of personal tax returns. Interim year-to-date financial statement, and that includes your profit and loss statement, your balance sheet, any ownership with over 20% is going to be asked to be a guarantor on the application. Copy of driver's license, operating license where necessary. And, on a case-by-case basis, we may ask for some additional documents. For instance, bank statements may be something that we ask for. And we always ask that, you have those docs ready. There may be instances where there were previously recorded tax liens or some type of tax obligation. We may ask for additional documents to show that you're current, that you're on a payment plan or something of that nature. So there are going to be instances like those, all right? Now, what I want to kind of spend a lot of time, and I'm sure there may be some questions, regarding this part in particular, but when it comes to the post-approval process in terms of what happens now when a loan is approved. For us, it's a simple process of we initially reach out to that borrower with a commitment letter just to say, hey, congrats, you've been approved for your loan amount, and we'll kind of let them know what that loan amount is. And just another addition here, typically we underwrite based on a client's maximum allowed amount for the program. So I'll give an example. If a client applies for, let's say, 25,000, they cash flow for, I don't know, 100,000. Our commitment letter initially is going to let that client know, congratulations, been approved for the max amount of that's allowed for the borrower. And that max amount is usually based on, let's see if I get this right, it's based on an average monthly revenues of a period of 6 months, any given 6 months within 2021, or if we're using 2022 as the period for our cash flow analysis, we'll look at the average revenue. We can take the best; it could be any period. So in most cases, we're going to take that best 6 month period of that client to create that cash flow analysis and approve them for that amount. Now, if the client wants to go for that amount, all good. No need to do anything. It's, you get approved for that amount and we move forward. Some clients may say, actually, I don't need that much. I just want, the 25 I requested. Or they may say, in one case, which I just had one client who she applied for 25K, approved 400,000. She said, let's do 50K, right? But they have that option to decide. So we do provide counter offer. On the flip side, if a client, applies for 100,000, but they only cash flow for, I don't know, 25,000. We're not going to say you're declined because you applied for 100,000. You didn't get approved for that 100,000. We're going to counter offer to that amount. But after all that's said and done, we typically would need to get a release form from DOL, and when we get that, we move to next phase, which is usually getting the the tax status letter. This is where a lot of challenges are coming up, where folks, when it comes to the tax status letter, we're sometimes getting record coming back stating that they may owe taxes, or in the beginning, once there were any type of situation where they owe taxes, usually the program, when it first started, required that they fully pay off any obligation, and then having that status letter show that they are, in the clear. Now, the program does allow for the borrower to provide proof that they are on some sort of payment plan. And once they can provide proof that they're on a payment plan, some instances we may require seeing evidence of at minimum three consecutive payments on that payment plan. One instance, I had a client who had just gone on the payment plan, and she just kind of right away made three consecutive payments. It doesn't matter the time frame. You just need to make three consecutive payments. And that was one of the ways that we were able to kind of move forward to a closing. There's usually a site visit required for the business. So we use a third party company, CSI. Not sure, I don't remember exactly what CSI stands for, but CSI is a nationwide third party that we use for all our business verification. So someone will be coming out on site, providing that they have a business facility. If it's a home-based business, no need for a site visit. A Google search would suffice. Confirmation of good standing with the state of Connecticut Department of Labor, valid operating license where needed, and certificate of legal existence. And Pursuit typically will order this on the client's behalf. So in terms of documentation, there's just simply the certificate of legal existence. This is usually through the Secretary of State's office. The certificate is good for 90 days. I would say for most businesses, I would highly recommend the moment you start applying to just start requesting this information. Pursuit, again, will request this for the client, but if they are matched with another lender, they will need to pull this on their own. So just something to kind of put out there. Confirmation of good standing is a document that's required with this DOL, as I mentioned before, and then this tax status letter is with the Connecticut Department of Revenue. Valid operating license really depends on the type of business. So in other words, a daycare, a restaurant, some type of business that requires to have some kind of license to operate. And that's usually, you can go to ct.gov at the e-license online link to access that. But that's pretty much what the documentation from a post-closing standpoint. I would say that the majority of the hiccups that we're seeing comes right within this area right here. So when we talk about, and I know one of the most important questions is, how long does it take, to fund it? This is where it is. And you can move on to the next slide, because, from our standpoint, an approval process from start to finish, I would say, well, in terms of I would say it all in all, we can do the application process for us, and I'll just kind of start there. Typically, when we get an application that comes in, before the application, once a client goes to the portal and they complete the pre-application, they're matched with Pursuit. Typically, what happens is within 24 to 48 hours, an assigned lender will be reaching out directly to them via email and via phone, both. Once that client responds and we send the application link to them, the moment we receive that application link, we usually in 24 hours do what we call a quality check. So that lender is going to be doing a quality check within that 24-hour window, making sure you have the right documentation, all the right stuff is there. Then we will send that over to the underwriter. Underwriting is taken anywhere from 3 to 5 days. So we'll say all in all, application phase from application to decision is about 1 week, we will say altogether. Now, once we get a decision and that decision is an approval, it could take us anywhere from 9 to 10 days on average to close. Have we seen instances where this has gone weeks? Absolutely. And these are the main two reasons why we experience that. The main two reasons: responsiveness from the applicant, dependent on the documentation required and the things we're asking for sometimes. And again, understandable. they have a business to run, right? And so in a lot of cases, I remember working with a daycare where the client, she was just going back and forth with the kids, and it was a lot, right? So this here, I would say that, responsiveness from the applicant and whether there are any challenges getting those documentation. You can move on to the next slide. And I think I can just, just really, just kind of think I've already touched on this pretty much, but you can take a look here. This one here at the top is again the biggest challenge, right? Because if they owe money to to Department of Revenues, in most cases, the process to get that payment plan set up, the process of getting those 3 consecutive payments, that's usually where the bulk of the time is spent. In terms of the DOL process, this is where this can also be a challenge because this is not a document, but it is a verbal kind of communication from DOL, saying, hey, yes, this business is verified, right? And in some instances, depending on the business, if they have no employees registered with DOL or owe some kind of employment, related taxes, that could sometimes come up as a challenge. And the problem is that sometimes we don't know what it is. We just get a no from DOL. And to get the answer sometimes requires some searching and some digging. And it's a lot of help sometimes, between, borrower, lender, and in some instances, the community group that may, recommended them. Some community groups have worked really well with us. SBDC in particular, they are very good in getting on the phone and doing the follow-up. We have the resources to help the client because sometimes the client just don't know where to go, where to turn. But in a lot of instances, that the help really, the groups that are hand-holding their clients have been very instrumental in terms of helping with this process. But these are the major two, I would say, in terms of common barriers, and then the others to follow. We can, in the interest of time, we can move to the next one. So I will touch on this and then a quick success story. Pursuits differentiator is, as I mentioned to you before, when it comes to the pre-qualification process, if we're working directly with a community group, one of the things that we do is we can actually take that client, handhold them through the pre-application process. We play very fair in a sandbox, in a sense that if a client, based on those questions, they don't necessarily are the best fit for Pursuit, we're going to put them through to the other lenders, right? So even we are doing this to kind of assist NDC. We're doing it to assist the client. We're doing it to assist the community groups because, again, we have the resource, we have the capacity to do it. We will handhold a client through the pre-application process. Now, as far as the loan process is concerned, again, our guys are getting on the phone with the client and we're having very transparent conversations, because if in that initial conversation, because we understand that folks sometimes go in the portal and they'll put whatever just to get matched, right? But it may not reflect accurate data. So we want to have that transparent conversation and learn about the story. What is the real story here, right? And so our guys on the front end, we're doing that. And once we do that quality check and we know it's a go, we're moving on to the underwriters. And what I love about our underwriting process is our underwriters are directly involved. When necessary, our underwriters will get on the phone with the borrower to ask, clarifying questions, to really understand the credit, to really understand the cash flow. If a balance sheet doesn't make sense, we're not just going to automatically decline. We're going to point out the challenges that we're seeing in those interim financials and maybe recommend another accountant or someone to take a look, right? So we're building our ecosystem in Connecticut right now, where we're learning about different service providers and TA providers within Connecticut that can help borrowers, because a deferred yes is better than a no, right? So we try to work with that client as much as possible to provide that flexible underwriting and really getting involved to understand the story, making cases for an approval through the additional guarantor to offset, cash flow issues or credit issues. And on the post-approval process side, there's an actual closing agent that's going to be hand-holding through the process. And again, they work directly with the TA partners to ensure that the borrower is fully taken care of. I think that's it for me. I talked a lot and I want to leave some time for questions, but Breakfast Bell is an actual client, in Connecticut. Tori Brown, who started her business back in 2015, worked. One of my colleagues worked directly with Tori, an amazing client, and she got $36,000 from this program, and now she's hiring new employees and doing some great things. So these are the stories that we look forward to. We have so much more. We just couldn't get enough stories in time, for this presentation, but so much success stories. And my contact information is here if you have any questions. But as I'm here, would love to kind of field any questions that you may have.
Thank you so much, Marlon. This was really informative and gave us a deeper, I think, appreciation and understanding of how the program actually is experienced by the potential borrowers. I'd like to take an opportunity to introduce Carl Rosa, Connecticut Main Street Center's Field Services Director, who's going to offer a bit of the Main Street perspective.
Thank you, Michelle, and thank you, Marlon, for a great presentation on how the process works. I thought I'd just give a couple of ideas and inspirations on how some of the boost funds could be used on Main Street. For example, some common uses for businesses on Main Street could very well include facade improvement or installation of new signage or awning installation. Sometimes your local community, your local municipality might have a facade improvement program which requires a match. Well, I think this fund could be that match that you're required to come up with. So if you recognize, and to our audience today, if you recognize your businesses and merchants on Main Street, desire to improve their business like this is a great idea for what these funds could be used for. Things like lighting, window displays, things that, can really enhance and improve the look, and, things you may have been putting off for a long time, which will really bring your business back to liveliness on Main Street. So these are some good examples of how to use the funds. Next slide, please. So restaurants, for example, new kitchen equipment and maybe upgrades. Maybe they want to make some renovations in their dining room. One of the things we encountered with seeing coming out of the pandemic was during the pandemic, a lot of the restaurants that had the means to do so kind of transitioned some of their operations to outdoor dining. And what we're seeing now are a lot of these modular outdoor dining setups. There's a portability about them, but still there's a cost required for them. So I think funds like this could be an excellent use to try and acquire this kind of thing for the future. I sense people are still going to like the fact that they can dine outdoors as well. Certainly payroll support. And also, could you go back 1 second, Michelle, to that other slide? And so payroll support for, if you're having a slow season. There's an example of at the bottom of this slide for, you can see a loan example. If you get 50,000, you need new kitchen equipment at a certain rate, repayment period, that's what you're looking at, $930 a month thereabouts for this. But if you have the means, and this might be a good time for you to upgrade and look at what's going on inside your restaurant, this fund is an ideal example of what you can, or how you can get the funds to make this happen. The next slide. So for retail uses, examples, seasonal inventory or new products and services that you want to start offering. This fund could be great for acquiring that. Most definitely on marketing and an advertising campaign. Perhaps you want to freshen up or create a new website, which allows you the opportunity to maybe sell your products online. But we find that if you have a website like that where you're selling your products online, it automatically results in increased foot traffic to your business. So this might be an ideal time to upgrade your website and your marketing efforts for your retail. Window displays, it could be a great opportunity to hire a professional to update your windows and make them seasonal, better lighting. Funds could also be used for utilities and rent, particularly in slow months of your business where you need to make those payments, but you just don't have the cash. This fund can be used for that. You may want to upgrade your security. Installation of cameras, your entrances, security equipment, and the costs that go with that are very, very important, but it's something you may have been putting off. These funds can be, certainly can be used for something like that. Next slide. And certainly in the nonprofit world, if you have a nonprofit-based business, funds like this could be used for leasehold renovations and an office setup. onboarding in case you need new software system or software equipment. And certainly, again, like in case of retail, you want to install and put together a new website. Funds like this could be utilized for that. So those are just a few examples of ways that this boost fund can be translated to real visual improvement and real visual effect on Main Street to our mom and pop businesses and our merchants on Main Street. This is how it could be used. And these loans, like Marlon was saying, anywhere from $5,000 on up, depending on your need and what you want to do. You may have been putting off for a while on certain improvements or things that you needed. This offers you an excellent opportunity to perhaps take the next step in your business. So with that, I turn it back over to Michelle and see if we have any questions.
Thank you, Carl. So yes, we're opening the floor to any questions that folks may have. I'll also have this slide up so that you can see some more information about the Small Business Boost Fund. I actually have a question that can kick us all off from Marlon. Can you explain about how the matching works in the portal? It would be very interesting just to have an idea of how that piece of the puzzle works.
Yeah, so there's a series of questions that the borrower answers, and each lender. Well, let me kind of go back a little bit. So every lender has its own standard underwriting policy and procedure for this program, and so the program kind of provides an overall framework per se, right, for the Boost program, but each lender can have its own underwriting policies and procedures for the program. So when a client goes into the portal to answer questions, they're based on the responses to those questions. And I'll give you one example, right? Our FICO score we mentioned is 640. We set our filters to 600 maybe, or something of that nature, right? Some lender may say, no, our filter will be at 640. So if a client goes in, and even though out of 10 questions, 9 matches with this particular lender, if they answer, 550 credit score to that filter, that lender will not come up, right? So at the end of it, a client can see anywhere from one lender, or they may see all 5 lenders, depending on the answers to those questions. And then the borrower has the option of choosing which lender they want to work with. And there will be a full write-up on each lender and their time frame to close in, provided at that final screen of the Connected Capital site. So they have the ability to choose. Now, in the instances where, based on the answers provided, if they don't match any filters, what's going to happen is that they'll only get access to a TA provider, a technical assistance provider. And that technical assistance provider's job is to really work with that borrower to understand why they did not match with the lender and to help them get loan ready. Maybe they didn't answer the questions properly, selected the wrong thing, which is why I always recommend, and as simple as it seems, we're seeing a lot of borrowers stumble on the pre-application. So I always recommend that if you're referring clients to the program, walk them through it or tap me on the shoulder. I'll get someone from my team to walk them through the portal.
Great, thank you, Marlon. And I know that we actually have Scott Arnold from SBDC who is joining us in this, in this webinar. And he was kind enough to share information in our first presentation on the Small Boost Fund. So it's great that we have such wonderful technical assistance providers in the state that can help with that piece of it. It does sound like, though, Marlon, that another barrier is after you even get past that hurdle. Is it the gathering of the documents that are required for the next step that seems to be a challenge?
Yeah, it is certainly a challenge. And again, dependent on, and in no way bad publicity to any other lender. But I would say that depending on their process, for us, it's a little different because, again, we have an actual person who's on the phone with that borrower to kind of outline what documentation is needed. When you're working through a system where it is an email coming out to you with terms like interim financials, that some business owner may not know what that is, right? Specifically, what is that, and I've used the term before and I realized that some borrowers like, I know what a balance sheet is and what a profit and loss statement is, but what are interim financials, right? So it's the ability to really work directly with that client and handhold them through the process. Not every lender does have that. And even in the cases where we do have that, and Scott and his team may be able to attest to this also. Sometimes it's a pull to get the clients to provide that info. But where we're seeing a lot of issues right now is really the interim financials. A lot of clients, they're either struggling to find someone to assist with that. They just don't have the personnel. They typically go to their accountant at, year end or once a year, to get those kind of things, and not necessarily having a run-in, financial statement throughout the year. But Scott and his team has been very helpful in providing help in that regard for businesses that just don't have the resources to put together a solid profit and loss statement and balance sheet. But that's where the major hiccup is on those two documents in particular.
Thank you. Yeah, I mean, it sounds like this process, it reminds me of my early days of mothering, about how it takes a village that,
Oh,
especially
absolutely.
for, a community of small businesses that are, working so hard, keeping the doors open and the lights on every day, to be able to provide both the capacity to
Mhm.
apply for this funding, and also that trust building that's so important, which is why Connecticut Main Street is hosting these gatherings, because we know that our members, the Main Street managers, are just another trusted partner in the chambers of commerce. All of them are trusted partners that can
Absolutely.
help
Absolutely.
assuage some of the concerns and help businesses along.
And Michelle, if I
So,
can add to that
yes,
really quick,
please.
I would highly recommend also, as we're working with borrowers, to encourage them to take their time to really put together, good financial statements, right? The reason why I say that is because this is not like the PPP funds are not running out. This is a revolving loan fund. Take your time to put together solid, financials. And the reason why I recommend that is because depending on the lender and the volume that they're dealing with, they don't have the capacity. Sometimes they're looking at that at face value and saying, not reliable financial statement, denied, right? But taking the time, and you may be delaying funding a month, two, or whatever the case may be, but take the time to connect with a trusted professional to help you put together a solid financial statement so you can be ready when you go before that lender. Because in some instances, the capacity is not there for the hand holding, and it's a decision based on what's on paper in front of them.
Absolutely. And it sets them up for, I mean, borrowers can borrow additional funds from this Connecticut
Yes,
Boost Loan Fund, right? So if,
yes,
let's say,
yes,
they start at $5,000,
absolutely,
they can
absolutely.
apply for a $50,000 loan.
Absolutely. So Michelle, that's a great point you just mentioned, because it's twofold, right? Look at it in the sense of a borrower who initially today cash flow for only 5,000, only 10,000, right? But going into next year, first and second quarter, whew, year's off to a great start, right? And those financials are communicating that, guess what? You can go back to the program and apply again, right? Or if again, the scenario that I gave earlier, where you qualify for 100,000, but you decided or you opt to go for 25 instead, that it's still available for you later on, right? So that's a beautiful thing about the it being a revolving loan fund, where you are qualified, you are allowed up to a max of $500,000, right? So as long as you can cash flow and keep cash flowing, keep coming back.
Yeah, it's wonderful.
Yeah.
Excellent. Well, I want to be mindful of the time, so we will close things out here. I want to say thank you so much to you, Marlon, and also Carl, for a really informative presentation. We recognize at Connecticut Main Street that our members, the professionals who oversee their communities' main streets, might see this program as a great opportunity to engage with their small businesses and to leverage access to funding to accomplish the goals that would enhance the entire commercial corridor. And I hope that the folks on the call or on the webinar found this as interesting as I did and are walking away with a lot of great ideas. Connecticut Main Street Network extends throughout our state, and this network includes professionally managed downtowns and neighborhood districts, municipal planning and economic development departments, and 2 regional organizations that represent the interests of many towns. We also have a professional affiliate membership program for industry professionals. This professional affiliate network provides our communities with access to specialized expertise that is relevant to downtown revitalization, preservation, economic and community development, real estate development, land use, transportation, marketing, and more. I hope you'll visit our website at ctmainstreet.org for upcoming events, including a webinar on January 19th from 11 to 12, which is on reimagining communal spaces in your downtown. We also have a library of archived webinars that will include this one, as well as others, a directory of our professional affiliate network and our small business library that provides great business advice for your merchants. Thank you all again and have a great day. And please don't forget to fill out our brief survey at the end of this. Thank you again.
Thank you for having
Bye-bye.
me. Thank you, guys.